Hello, everyone. Thank you for waiting. It took us a moment to connect, but I'm glad we're all here. We're starting right at 4 p.m., which is great. So we will be efficient, I guess. Um, Hi, everyone. My name is Jovan Radnic, and I'm the product marketing manager at Logate. And it is my pleasure to welcome you to our webinar. And it's like our first episode, actually, first of many, I hope. We are hoping to provide huge value to everyone watching us, mostly people from the banking industry. But I'm sure that some of you may find our next few episodes really interesting as well, as we will be talking about customer experience, open finance, embedded banking, and more. We started this podcast really because we saw that there's a need for additional education, and we saw that there are so many people out there providing huge value to bankers all around the world. And, as we are a software company that develops CRM solutions, omni-channel contact center solutions, and other software, really like what we've come to realize that is technology. But technology is there to serve us, to help us do our job better, and to help us, understand our clients better, the market, all of the conditions. But it's not just the technology. There are so many people out there giving huge value to bankers all around the world. And one of them is Javier Guevara Torres, who is the CEO and co-founder of C Innovation, one of the leading research companies in the financial industries. And he's been really someone who's helped me so much personally develop in this industry and gain so much knowledge, even that I started this podcast. So it is my pleasure to welcome Javier today as we will be discussing the digital banking in 2023. Hi, Javier. Can you hear us?
Hi, Jovan. Yes, of course, I can hear you very well. Thank you for the invite and that great introduction. I really appreciate it. Thank you.
Thank you for joining us. So I'm going to start off with this really to give people the background. With C Innovation, you're giving so much value to people, and you're talking about today's trends. You're talking about challenger banks, incumbent banks, market conditions. What are those exact services that you offer to the clients, and who are your clients?
Yes, okay, Jovan. Yes, we set it up as innovation 2 years ago. And our main clients are big banks, leading incumbent banks, digital banks, and also consultancy firms. What we offer them is basically bespoke report where we provide a good understanding. We help them to navigate the fintech ecosystem. We're very focused on digital banking, but we cover other areas of fintech like wealth management, payments, as required for our clients. We have also one of our flagship offering is our deep dives and sectoral reports, where we go into deep analysis of the latest trends and developments of each digital player. You can see those in our website, and we also offer to our clients a platform, as innovation platform, where our clients can get access to weekly analysis, monthly deep dives, and also sectoral reports. That some of those we will be talking a little bit of that from our conversation today, I'm sure of that. And yeah, I mean, it's a little bit we offer our clients real research, analysis, trends, and insights on the digital banking landscape.
Yeah, I
Uh,
would sum it up as a practical knowledge, so to say, to navigate the market conditions. And just as a brief statement here, we will have a Q&A session. So any questions you might have for Javier, you can ask them in the chat. And I will definitely take 15 minutes at the end to go through them and ask him. So he will be glad to answer them. Javier, thank you for that introduction about C innovation. But how did you come to this point where you started the C innovation? Because you have a knowledge and you come from the financial services industry. You have a very wide portfolio when it comes to your experience. So, what led you to actually found the company, and how does it benefit the players in the market?
Yes, that's a good question. Yeah, I think that was a process. That was a process. I started working for leading financial services. I'm originally from Colombia, so I started with a leading bank here, understanding a little bit of finance. But when I went to work for Santander in the UK, it was on 2010, and all the fintech was all around. We had a lot of the rise of the many players in banking, digital banking, started to raise a lot of challenges for the incumbent banks, and I had the opportunity to lead the insights for the wealth management division. And private banking division in Santander. So my role was a little bit of what I'm doing now for on innovation. We was to look at the innovators, tracking what the new offering, what customers want, and give senior teams like the main elements for them to drive the strategy going forward. So that was a role that I really appreciate. I took advantage, and I was also engaged in the technological platform that Santander put on the market to challenge like innovative players like Nutmeg in the UK on a robo advisory platform. So that was one part of the where everything started. Then I moved to HSBC. I went to France to work, and I was very surprised that in France, it was probably around the 2018 when I arrived to France, and I started working with HSBC, supporting Brexit transition from UK customers to France. And I realized then I had the opportunity to look a little bit more into the financial system in France. And I was really surprised that digital players and innovation in financial services was in a very early stage there
Hmm.
compared to the UK. So when the UK started already like 10 years before talking about we need to do something, we need incumbent banks need to be aware of these new players that are raising and challenging our business model. In France, it was an early conversation. So I have two partners. One is in Switzerland, another one in Spain. We had very different backgrounds from marketing, strategy, research, product development, and we decided that that will be that we wanted to take forward that idea to help financial institutions to get better visibility of what is happening in the technological market, how that can be affect their jobs, and also with the specific objective to make their role easier. So we, in the way we work with some of the banks, is we provide a view, quarterly view, for example, of what is happening in fintech, what is happening in digital banking, so they are able to take decisions and drive a strategy forward.
Understood. And it's funny because when you mentioned that the French market was in the early stages of innovation and responding to this wave of challengers coming, it made me think like how we used to think of digital banking as a website and maybe like a mobile banking application. It's so much more than that today, right? What would you say digital banking looks like today, and what does it mean for a bank to go digital now?
Yeah, absolutely, absolutely. I think that the term of digital banking have become increasingly relevant, and more with the pandemic, and people has turned into online and mobile banking apps to manage their finance.
Mhm.
Uh, I think today digital banking is integral part of the finance industry, and we can see that we're moving into a more. I actually brought, just let me have one slide that could give us a real good view of what this digital banking means at the moment. So we're not talking about just we have core banking elements. We started an accounts, we move into payments, insurance, investment, credits, but we also looking that digital banking is moving across the banking ecosystem to offer any other services that are around the core banking elements like account consolidation, spending planning and control of budget, loyalty discounts, financial
Hmm.
education, and we're also moving into a non-banking ecosystem. As we can see, I brought also an example that represents very well that, but we're going into lifestyle, the super apps that is called, that offers beyond banking, and this is more relevant with the open banking, with the data availability that is coming and that is integrating in many other countries. So this is important, and it's important also to see the integration of the technology that is being used to enhance the customer experience or even the security, like blockchain. We can see that banks all around are moving into using artificial intelligence to improve that customer experience and be offering chatbots for customers to find really quickly answer to the questions, and that also impact, of course, cost. And we have predictive analytics, which is basically to offer personalize and make better use of the data, and so on. And we have also the APIs that, as probably we will discuss later, we're talking about collaborative models. So banking needs to open. Digital banking is not more about core banking products, but is about an ecosystem that covers also non-banking products and services. And just to reflect my point, I think of is one of the best examples
Hmm.
that represents what is digital banking today. So it was launched in 2019, the super app from Tinkoff, and it covers something that some of the players, we can say that Tinkoff is one of the successful players out there, and it's been leading the trend from other digital banks. So integration of their own services in lifestyle, like travel, restaurant, shopping, also offering a marketplace in terms of different industries, uh, bonuses, also looking at the younger generation, so
Hmm.
offering banking services to juniors from the age of 7, and so on. And you see also that they are using artificial intelligence through their assistant, virtual assistant Oleg, personalized offerings, big data and machine learning, and so on. So that's a really good view of what is digital banking at the moment.
Yes, and as your graphics is showing it, daily banking becomes just a small part of it, not the 90% of it, as it is in most banks actually still today, in most incumbent banks. And it made me think, of this thought that we would be using the banking products without being aware of that we're using the banking products.
Yeah, yeah, absolutely.
And it makes me think of this point, and I'm glad that you pointed out the example of Tinkoff, the super app, because there are so many challengers now appearing in the market. What is the reason of that? Is it like loosened regulations where basically it's much easier to start a bank now, or what is it that's showing us that there are so many of them?
I think, I mean, in terms of new banks, you mean that we can see more into the financial ecosystem,
Yeah,
more
exactly. We can
digital
see,
banks.
yes, we can see more Revoluts, we can see more Wise, we can see more of N26 and all those neobanks.
Yes, I think yeah, you're right. To show you, we did. a piece of research at Innovation, and we saw just looking at the trend, how number of digital banks are globally, and we found that around 40, there were more than 40 new digital banks out there. And despite this is despite a decrease in funding that we have last year, that we have a very challenging environment, and yeah, we saw this, and the answer to your question is that there is still some markets that are underpenetrated. Uh, we can see that there are some regions that are growing faster, like Africa, Middle East. They're bringing new digital banks because the digital bank trend is starting to take more, be stronger there. And also, um, we see that there are some players that are also offering some significant or original, let's say, kind of alternatives. So we have, for example, we identify that some of these new players, Trust, for example, in Singapore, and Lulo in Colombia,
Hmm.
uh, are offering significant savings to the customers. In the
Uh-huh.
case of Lulo, it's an innovative, let's say, a proposition, because what they offer is to give back to the customer some of the tax that Colombians have to pay by moving the money within the bank. That's a very old tax that is in place, but Lulo is changing that to offer giving that back to the customer. So that's a really interesting proposition. Other challenges are targeting very specialized niche market. I'm referring here to Hitch, for example, in the US, that is targeting couples, and they make them like a healthy spending habits between the couples. So that
Mm.
is very targeted. Is not anything that they know before in the US. And also we have, of course, the SMA segment. We can see Rauba in Portugal, and WIO in the United Arab Emirates, which is providing multi-user access to freelancers and SMEs. So this is the main, I will say, there is still opportunities to challenge and target specific segments and new regions where there is unpenetrated digital banking landscape, and it still continues dominated by few global or leading banks in each region.
Yeah, definitely this segmentation that you mentioned is good. And Rauva, for example, I know that they're also offering to open accounts in Portugal, basically where you can open a business through them and they help you with the entire process. So they're really specializing in that SME
Uh,
segment.
exactly, and they have also a very international perspective. So yes, yeah. So that is covering like the gap that you can get into specific segments.
Yeah, and it's bringing a lot more value to Portugal as well as a country, because these businesses are paying taxes then to Portuguese government, so it's good for them as well, and it's a motivation for them to make the regulations easier for that, but also to allow Rawa to do what they're doing in a better way and offer better customer experience. Um, Even though
Exactly.
that you just mentioned that there is like a rise, and we can see in the chart here that more than 40 of them opened during 2022, even though it was a challenging year. They still have issues with profitability, right? Because most of them actually still focus on instant payments, and they're trying to get into lending, but how are they doing with that?
Yes, yeah, you're right. I mean, from our study, when we saw that from the 294 digital banks that exist globally, we have seen that just the 5%, so that is around 16 of banks have reached profitability, and I think that's a very interesting outcome that we can get from this slide. I mean, when one of the ins and out of digital banks, a research that we did last year, was about to understand the different a, a market strategy for how independent banks and digital banks that were backed by corporate, they differ. And we found really interesting angles and conclusions that give us to an a reason why they haven't become profitable as
Mhm.
yet. I mean, we can see this year we have Revolut have announced to be on black and also Bank, and I think that we can see that that is changing. But what is happened is that from the product strategy, the quick go-to-market from independent banks was very focused on go very quickly into the market, and most of them later will acquire a full banking license, very different to the backed by corporate, we were using the parent company banking license to go to market. So that gives them a differentiate because they, from day one, the backed by corporate,
Yeah.
you can offer a full product suite, and also they were very focused on monetization. So they had offering a border portfolio that enabled cross-selling and lending offering, making that more profitable. So they had, and when I refer back by corporates, I'm referring all those banks that could
Incumbent,
be
yes.
by financial institution or no financial institution. So the case of Open Bank, for example, from Santander, is a bank by corporate, and monetization is key. While we move into Revolut and the type of independent banks, they were very focused on acquisition.
Yeah.
So grow customer base very quickly. They usually offer a very single product, and they are new to the market. So they need to, and they also use it like a reference valuation in the early stage. So they were happy to show and evaluated that these raising funds, that was success for them, raising funds and reach a valuation, while backed by corporate, they were focused more on actually the monetization was key from day one.
Understood. Yes, that makes sense. And now we're seeing that a lot of them are actually moving into the lending space as well, which is considered nowadays not considered, but it is dominated by incumbent banks still because they have huge resources and they still keep their ground there. How can they though stay more competitive in such an environment? Because as I said, more challengers are getting into lending, and they're usually more agile in their approach of designing new products and services, and they're much quicker when it comes to their go-to-market strategies. How can incumbent banks compete with that?
Yes, okay. How incumbent banks can compete uh, with digital banks? Okay, yes. I mean, first I'm going to your question about uh, that they are getting slowly into the lending space. You're right, absolutely. We did analysis on the top European digital banks, and we could see that let's see this slide, for example. uh, Top digital bank, we went into the Starling, Monzo, N26, and Revolut, and we identify, of course, they are moving. They considerably raised their lending book compared to pre-COVID levels. So we have Revolut, Starling, Monzo, and N26. The four of them are lending around 6 billion by 2022, which is a significant increase compared to 800 million in 2019. And I think one of the reasons is what we just discussed before. They were very focused on growing the market share, their knowledge in the market. But this shift is more about offering additional revenue streams as interest rates are higher, and this provides also deepen the relationship with new customers and wider their financial product offering, and making them gain new revenue streams that we know, of course, lending is much more profitable than other products, and most of them now holding a banking license, which is also reducing the need to find a partner to be able to offer these kind of services. For example, we see that Starling and N26 represents almost 90% of the lending of these four digital banks, while Monzo and Revolut just hold a small participation uh, because they have just come recently into consumer lending.
Yep.
Differently, Starling and N26 has a great portion on the books in business lending. Um, Also, Revolut, we know it launched in 2020 on secure loans offering and credit cards in Lithuania, and it's been expanding that services to Poland and also across Europe. So we can expect that is continue that expansion across those lending products. And Monzo on 2021 gave customers a new way to pay for things using the Monzo Flex, BPNL product that saw quite interesting growth from customers that were, looking forward for this kind of lending.
Yep.
Yeah. So I think that links to your part. So the second part of your question, I think, was what digital
Incumbent banks.
incumbent banks can do on this space. Yes, I mean there is some many challenges that digital banks have at the moment that I think from my perspective um, there is, I mean, they need to improve their digital maturity.
Yep.
Basically, they need to accelerate it and rather than just consolidate the digital transformation. Um, we have that platform access to richer data. We have banks that are still looking for ways to make better decisions using data in order to offer more personalized services.
Yep.
So I think here, uh, as we go beyond 2023, data it needs to be a greater emphasis on analytics to become essential to the value chain to
Yep.
offer new financial products and services and be able to tailor products and services to the different customer segments. And also, I think one of the key elements that incumbent banks have uh, over digital banks is the trust from the consumer. So I think that's something that they need to take advantage to maintain their existing revenue streams and create new ones as the and it's a better way to fending off competition from new entrants. So I think those 3 points will be quite key for banks to make challenge to the new entrants in the future.
I'll just add a comment to that. I absolutely agree with those points, and I will just agree that we, as a software company that provides the technology, right, saw that processes often need to be better within the organizations as well, because there's always like this long chain in decision making, whereas in Revolut or like in one of the digital banks we talked about is much faster, and they get to execute things much faster, whereas in incumbent banks it can take a while to get to the decision itself, and then you have to prepare all of the processes and then you implement the technology, whereas your competitor is already out there in the market acquiring customers. So that's something as well to point out.
Absolutely, absolutely. And Jovan, just to make a point also from your comment is that, I mean, since I was in HSBC like probably 5 years ago, it was already a challenge. It was already a challenge, and it's a challenge now. And I mean, I know some leading banks are working hard on that. There are big structures, but yeah, as you say, they need to make sure organization culture works well so they can take capitalize all the opportunities in the digital era.
Yeah, and it takes a while to actually get to this point where the culture within the organization is innovative, any organization, and banks are I mean, banking is the most regulated industry in the world, so it's even harder on them, I would say, because sometimes you want to be innovative, but maybe your country's regulations do not allow that, so it's not really the easy part. But still, anything that can be done to improve things internally within the organization usually reflects on the technology adoption later on. And
Absolutely.
let me just ask you now. This is probably my last question because we're getting to it and it's in the title as well. What are some of the top trends that we can expect in banking in 2023? There's lots of talks of AI. Will it be such a game changer? Because you did point out AI chatbots earlier on, but will it be that much of a game changer right now, because it's still in the early stage? And as someone who does marketing, I saw, for example, what Google did with their Bard as a pendant to OpenAI, and it really kind of failed because people were so disappointed with the functionalities. The launch was just messy, and even Microsoft now with their Bing chat, seeing what Google launched, also kind of went a few steps backwards, and it seems like they developed something that's not so ready for the market yet. And now I see a lot of banks are. I read something about the banks where they're banning the use of ChatGPT within the organization itself. So it's really
Yeah.
actually funny to see that.
Yeah. No, no, definitely. I think artificial intelligence is going to be one of the key trends that we will see during this year and the year to come, because it is a technology that is being improved, and we can see, you just give a good example on ChatGPT that is just showing what the technology can do. And for banks, this technology could enhance the customer experience about the chatbot, the virtual assistants, personalized recommendations. So that is quite big when you're thinking to offer a comprehensive and enhanced customer experience. But that doesn't stop there. I mean, AI can be used for fraud detection, prevention, to help banks to improve security, also streamline operations. To this kind of technology will help free up employees' time to focus on more complex
Yeah.
tasks. For example, that requires actually human intervention. Also, as I mentioned before, personalization product offering. It can, the technology can analyze customer data to offer recommendations on products and insights of the customer, and it will help banks to tailor those products and services to the customer's needs and preference. So I think in general, yeah, we will see banks adopting artificial intelligence technology, and we can expect that be included into the future of the digital banking and digital transformation in the industry.
And I think there's going to be a lot more of platform banking based on all the reports that I read from C Innovation. That there will be a lot of collaboration within several sectors to bring these banking and non-banking products together for a seamless customer experience, right?
Exactly, exactly. I think that was one of my other trend that I think. I mean, definitely banks will continue with the digital transformation. They will see the ways where how they can improve the experience for their customers. And what you're saying about, I mean, we're talking about open banking. Open banking is allowing third parties providers to access to bank data, so it will continue its popularity in 2023, and we can expect more countries, more banks adopting those standards. And as you say, collaboration will be a model that will be included into the future of banking. So we can expect banks working along fintechs, offering, bringing some more innovative propositions.
Yeah, I was going
And
to ask
yeah,
you about that, whether they would compete or work together with fintechs. So that's a good point that you said that they will work together actually to bring this better customer experience. Um,
yes, yes,
and we have a
yeah.
question now from the participants, and I'm encouraging everyone to ask any questions you might have, because this is now we're entering the Q&A session, the final session of the webinar for today. Ramia Mohan, and I hope I'm pronouncing it right, the digital banking expansion that is more into non-core banking offerings, is it because of the loosened regulations? And how is European digital banking different from other continents?
Okay, I think that's a good question. In terms of the why, so many players, I think the first question was why we have so many digital players at the
Yes.
moment, isn't it? So
Yes.
I think there is legislation. Legislation is trying to make a more competitive environment to for customers to benefit customers and have a broader option. And from those, some of the fintechs can offer not a complete product proposition, but a specialized niche, and that have allowed them to improve the customer experience from users and enter in different areas rather than going through all banking alternatives. So I think that's why we see a rise. So regulation is taking that to them. They are focusing that they can improve the a single niche offering, and they are going for it. And from the other side, when we see digital banks more entering into this space, is about going into markets where there is on top, there is still a lot of consolidation of big players, and there is still a lot to do in terms of offering, and there is the opportunity in tech markets, I think.
And I just wanted to touch upon that a little bit more because there's this talk about the regulations, and sometimes a lot of it depends on the will and desire of regulators, so to say. And is there any way that banks can influence, so to say, legally, of course, the will of regulators, maybe through some associations or some sort of joint effort to make the regulations loosen, so to say, as Ramia mentioned.
I mean, usually banks, global leading institutions make part of the committees, financial committees in the country, and they have the representatives in all of those in those meetings. I think in terms of incumbent banks, they have a wider knowledge in terms of regulation. They need to comply with many different laws. So they understand and navigate better than any fintech, and I think what is happening with open finance is to give some other players the opportunity to use the data to serve better the customer. So as fast as incumbent banks can move and get a better understanding of the data and make better use of that, will be great. I mean, we just in a report I saw from Sopra Steria last year, they identified that most of the leading executives found that it was a issue for them facing for collaborative models. So they understand that collaborative models is coming, that open banking is coming. They're taking actions to face that. They are investing, but only 19% were actually feeling ready
Mhm.
for open finance, open banking. So they are doing, they know what they need to do, but they are moving very slow, if you ask me.
Yes, and it gives is a lot of chance to those who are still, new, so to say, to that to the market, and new to this whole idea of open finance, to move quicker if they want to compete.
Yeah.
Um, and I think other part of the Ramia's question was related to how is digital banking different in Europe compared to other continents, because we do have some profitable challengers here. We have Revolut that just become profitable, so to say. We have Aprila from Norway, right? N26. So how do they differ compared to their competitors in the US and in other markets?
Yes, I think from a start, I think one of the key differences, I mean, if we see at different continents, they have their own way in terms of, regulations. Open banking has been in the UK and Europe already for quite a long time. We've been talking about that. So that's something that is opening, and here with the financial crisis, I will say, if we go back to 2008, when the rescue of some of the biggest banks in the UK, so that opened to customers to ask for more regulation, for giving, more uh, better service, and so that gives um, this European market to move forward, more competition.
Yeah.
So I think it's a competitive market. We've been here since a long time now, and from differentiation of with other continents, you can see that most of the digital banks here, if we compare with the US, for example, most of the digital banks here, they hold a banking license, for example.
Uh-huh.
In the way on the US, for example, is more partnership structure. So you have Chime, there is a neobank that is partnered with another regulated bank, and it doesn't hold a banking license. So I think if we see two geographies, there is very very different setups in terms of the structure of the digital banks.
Right, and that's a great, actually, your answer is a great intro into the next question posed by Branimir Jevtic. He asked, in your opinion, how much time is left for legacy banks if Apple, Walmart, and others are striving to become financial alternatives? Because they also have a lot of customer data.
Yeah. That's really really a good question. I mean, we've been talking, and I think from a few years already about big techs coming into financial services. We just produced. We're going to launch a collaboration with Sparks. This week about Apple in finance. So where we go into the details. So just you will find the document probably on Thursday. You will be able to get it from C Innovation website. That will be open to everyone to get it. But basically, what we saw is to understand what is Apple doing to financial services, and what is the path that they are going. And you mentioned also some other players. We have Google that really changed their strategy from 2 years ago offering banking accounts to now offering the platform and collaborate with banks in a different way rather than going them for themselves. I think regulation is key. There is a lot of going on there that big techs don't have the experience or the knowledge. They have a lot of customers that they can touch at any moment, but I think we will see more of that. And in terms of timing, I really don't know. I think um, we're going to see that there are more conscious, let's say more, they're going slower than probably we thought before. But at the end, I don't see why they won't move if they can put in place a very good proposition and a good, very understanding on the regulatory approach on the digital banking landscape.
Okay, before I get into the next question, I'm afraid that it's going to have to be our last one because of the time. But of course, if you have any other questions, you can always reach out to Javier on LinkedIn. I know he's very active there. I wanted to just touch upon that since you're publishing that report on Thursday. Maybe you can share something, give us a little bit of a sneak peek into Apple's strategy right now, like something that's one of the key takeaways maybe of that report. Could you do that for us since that's become like an interesting topic?
Let me see. I mean, is we're really looking forward to share it, to bring some of those insights. I can see. I mean, from what I see, from my perspective, is that Apple is really has been, finding different association with different banks. We know about the Apple Card, the BPNL service, lending operations. So there is a clear view that they are going into more lending, and I think uh, from those partnerships they are learning something. They are getting a very good understanding of where getting into, and what I can say is that we can expect a little bit more from Apple offering into financial services, and why not maybe moving along in a couple of years just by themselves.
Yeah, that's what I was gonna say. They're learning through the partnership so they can later on move on their own.
Exactly, exactly.
I'm going to be like, once you publish the report, I'm going to be sharing it with the members of our community, those who are in our newsletters. So if you haven't subscribed, go to the website I just posted in the comments, subscribe there, and you'll find a form in the middle of the page, I think. And we will share the report with you. We will link back to C Innovation once they publish it on the website, so you don't have to refresh it like I probably will every minute on Thursday as I'm waiting on it. And we have another question from Danilo. And hi, Danilo. I know Danilo Viric personally. What do you think about cooperation between banks and fintech companies? Could you give any good example of this or some predictions? Basically, you just mentioned a little bit about that, but maybe you have another example to share here in Europe, because that one is in the US, and that's usually, I think most of the attendees here are from Europe, so I'm sure they would like some European example.
Okay. Yeah, I mean, as I mentioned before, yeah, collaboration will be key. We're going into a business model that is changing everything about what we knew about banking, where different propositions and data will be shared. So we need to be understanding and offering what the customer really wants through our banks. So I think that there is interesting collaborations. More I have in my mind from fintechs through other fintechs offering, for example, I mean, if we see, I mean, in terms of the uh, collaboration from banking, we see that banks sometimes prefer to acquired. We saw that in Nutmeg, for example. We saw that JP Morgan just a couple of
Yes.
years ago bought Nutmeg, a leading robo advisory in the UK that was taking market share very quickly. They wanted to go by themselves. Other digital banks were building their proposition, and then we saw JP Morgan bought it as they have very specific plans in the UK. So that's what I see. If we see some other collaborations in terms of fintechs, we can see Quanto that doesn't have a lending license and is building collaboration with October, another French leading players to offering those kind of products that they cannot offer because it doesn't have a banking license. But eventually, it will make sense for Quanto to have a banking license. So I think I don't have really on my head at the moment like a very interesting collaboration that I can share with you. But yeah, if I get to my mind, I will send to you, no, Jovan, so you can share with the team.
I think that's a very good. I think you gave us a lot of insight with that answer as well. I think that's about it actually, and this is our first webinar, and it's complete. I cannot believe it. I'm very excited. I see my colleague Masha said that it's very good, that she enjoyed it, and that it's especially needed in Eastern Europe. And I agree, we have not so much knowledge about neobanks and digital banks here in Eastern Europe, and I think it can help, whether it's incumbent banks watching or maybe someone who's thinking of starting a neobank here. So I think it was very helpful. To build upon that, upon the partnerships and everything that you guys asked, we will be having another episode in 2 weeks already, with one of the leading experts on open banking and embedded finance. And you will be hearing a lot more on the collaborations and platform banking in that episode. I'm very excited for that. Javier, thank you so much for all of your knowledge and sharing it with us. I will be sending everyone a follow-up email. You will all receive it because you registered for the webinar. You can pass it on to your colleagues, please. And please give us feedback, any kind of feedback, whether it's about me not asking questions right or whether it's about tech or anything. Please give us feedback via email once we send you the follow-up. You will receive this video, exact video. You will receive the whole presentation because I know Javier actually had more slides here that are very useful. I looked over them before the webinar. And you will receive also the podcast episode the day after that, because this will be published on Spotify. So in case you're a person that likes to do the dishes and listen to Spotify, that's for you. And thank you so much for following, everyone. I'm so glad you become a part of this small community, and I hope we're going to be expanding. We're going to be sharing a lot of knowledge. If you have any questions or anything, you can always reach out to me via LinkedIn. You can reach out to Javier. He's always sharing knowledge. He's very active there, and see innovation as well. Thank you so much, and I hope you all will have a great day, and I hope we will get to see you all in the next webinar.
Thank you, Jovan.
Thanks,
Thank
guys.
you all.
Yes, bye.
Bye.